Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always with the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you?
I'm doing pretty well. It's a nice bright day outside. It's been fairly moderate weather in here in central Ohio, minus the 4th of July. It was pretty hot and nasty that day.
Supposed to be pretty hot here today. It's nice now because we don't have a lot of humidity this morning, but it's supposed to be like 95 this afternoon. So
Well, you got to love it in the Midwest when it's so humid that all you have to do is breathe air to drink water.
that's right. Yeah. Yeah, that's right. It's gonna be a hot one.
It'll be a hot one. So, Ben, looking at the markets coming into this week, we've had some moderate adjustments to both sides for different commodities here. So, let me give a quick recap rundown of the market. So, September corn was up 4 cents in the week at 4.92. December 23 corn down 6 cents at 4.99. August 23 soybeans down 12 cents at 14.55. November 23 soybeans were down 32 cents at 13.45. Soybean oil for August up 1.66 cents at 65.33 cents per pound. Soybean meal for August by the short ton down $5.90 at 405.80. That 2023 wheat crop for September up 5 cents at 646. July wheat for 2024 down 1 penny at 690. And then crude oil for September was up $2.72 a barrel at 72.96. And a quick correction, I think I said December corn was down. It was actually up 6 cents at 4.99. So quick correction there. But Ben, before we dive into things too much, I want to just give some highlights coming into this week. We saw U.S. energy stocks down on the week, but with higher usage, what does that kind of signal to you as we're right now, in July and the heart of that summer driving season?
Well, we've certainly seen ethanol production pick up the last couple of weeks. In fact, this last week was the highest year for corn use for ethanol, or excuse me, the highest week for corn use for ethanol this calendar year. It was the second highest of the marketing year so far. So I'm starting to pick up. We still remain about 35 million bushels below where we need to be to hit USDA's target. That's up from down 40 million last week. So some improvement on the ethanol side. And I think as we look ahead, even with potentially some higher gasoline prices over the next couple of months, just due to the reduction of output by some of our oil producers around the globe, we potentially could see some strong ethanol. I'm still not expecting us to get all the way to USDA's target. I think we've got a deficit with a little of remaining months or weeks to go. So I do think that USDA will lower their corn used for ethanol just slightly, but better here as of late.
Well, moving right along to the export market, ag exports sales for 22-23 that came out that they're really mixed over the week. Corn increased and soybeans decreased. So as we see that kind of spread action, but where does that kind of tell you that we're sitting right now on the trade market?
Well, the commodity that had the biggest week, or arguably the strongest week for the export picture, was on the wheat side. Wheats, especially soft red winter wheats coming out of harvest here, had a very strong export week, both in terms of inspections and sales. So that I just wanted to kind of mention that wheat had a very strong week. Corn continues to struggle. We've seen corn exports just kind of fall off a cliff here as of late. It's seasonally that we see this downturn when we kind of start to run out of available corn supplies in some parts of the country. And I think that's what we're dealing with here as well. But cheaper supplies, other places around the world have really tapered off our corn exports, and that's causing a bearish picture on the corn side. Even, we had that 2 million acre increase in corn acres here in the United States. That was bearish. Now we've got some demand that continues to just paint a bearish picture on the corn side. The one caveat I would make is we're starting to see some challenges with Chinese corn production for the summer. They're on the same growing pattern as we are, and we're starting to see some challenges in that market. If China were to come into the U.S. market, that would be a rallying point for U.S. corn. However, they seem to be interested in the cheaper Brazilian corn at the moment. So they'll have to work through that before I think they come to the United States. But here in the next couple of weeks, we could actually see some rather large Chinese corn purchases.
Well, and just even with that being, potentially down the road a little bit, as you noted, there's kind of a bearish trend to the corn inspections coming into this week. So, will that be enough to kind of turn around the corn market to an extent, do you think?
I don't think so. The big driver, if we were to see a big rally in corn markets, is going to have to come on the production side, a reduction in yield. But I certainly think that there's an opportunity maybe to pick up some sales on these price dips, right? And kind of find a little bit of demand at some of these lower price levels.
Well, kind of shifting gears and into what you're talking about, where some of that would have to come on the production side. We actually saw crop conditions really increase coming into this week. As a lot of maybe traders and ag economists expected. As you see where the crop conditions are kind of setting now, what do you think the mindset is moving forward for the market as you're kind of monitoring the weather, monitoring everything that's going to impact those crop conditions moving forward?
Well, this is a great discussion point that I think you could ask 10 different people and you'd get 10 different answers, because there's kind of broad uncertainty. I know we all hate that word and that term, but I would just simply say that this is the year that we could actually see a new record in soybean production and a below trend corn yield. Now, whether that turns out to be true or not is yet to be seen, but it's just that type of year to where things aren't moving in tandem together, and we're seeing some divergence in crop conditions. On the corn side, we did see a rally we saw an increase in corn conditions this last week, and I think that was representative of some rains and some strategic parts of the Corn Belt. It's very dry in certain parts, and the high heat this week without some rain, if we don't get some rain in this system that's coming later this week, will be very detrimental on national corn yield. If we get the rain and we continue to get rains, maybe we do see a trend line yield of 100. Well, I shouldn't say trend line yield, but we see maybe 177, which is pretty close to our record corn yield for the U.S.
Well, and just on that, even though we're seeing that corn condition rating creep upward, it's still a decent margin behind last year. Not a wide margin, but still notably behind last year.
Yeah, so I tend to do everything on a composite score, so it takes together all the conditions rather than just that good to excellent. And our corn composite score for the week rose 7 points to 347. A perfect crop would be 500. So to compare that, 347, we were at 363 last year. So below last year, but not terribly below.
All right, Ben. Well, looking forward to the rest of this week. We have pretty notable reports coming out from USDA as they release their supply and demand updates. What are your expectations ahead of this report's release coming out 11 o'clock Central on Wednesday?
Well, let's start on the old crop side here for just a second. So the 2023, our current marketing year, we had that bullish grain stocks report last month, that June 1 grain stocks report. And how USDA incorporates that into the balance sheet, I think, will be a little bit interesting. My expectation is that they put those missing corn bushels in the feed and residual use demand category. So an increase in corn and feed residual use, but then potentially offsetting that completely with decreases in corn use for ethanol and corn exports, right? So we could end up with an ending stocks that is the same month over month, even with a very bullish corn stocks or a bullish corn stocks report. Do they fully offset that? I don't know, right? We might be still early to make the full revision on the corn export picture, but that's certainly a possibility. Turning to new crop. So this is now the 23-24 production year, or the crop that's in the ground that'll be harvested this fall. The big storyline here is what USDA does towards the yield. It is not uncommon to make yield revisions in July, but it's also not the norm. Okay, so it's happened before, but it's not the norm. The trade is expecting almost a 4.5 million bushel, or excuse me, 5.5 million bushel reduction in that national corn yield. I think that's a little bit steep for this time of the year, but certainly a reduction of 5.5 million bushels would pretty much wipe out the gains of that 2 million acreage of added corn acres. So maybe some offsetting factors here that leave ending stocks for both crops pretty stable would be maybe, a surprise to the market to the downside that everything remains the same. So
So
at least
really,
the ending number remains the same.
yeah. So both for old crop and new crop corn, then potentially a lot of pushing and pulling, and all to really stay about in the same position. So what about as you look toward the soybean front and what you might expect to see there?
Yeah, so again, a similar story here maybe is like USDA will have to incorporate that June 1 grain stocks report that was on the low side. So you might see a little bit more of an increase in maybe like the residual category on the soybean side. They could just lower ending stocks as well. However, they've got maybe a potential revision on the soybean export side to the downside, which would again, balance that out. We might end up with the same ending stocks. On the new crop side, right, it's too early probably in my estimation to think about reducing the national soybean yield, right? Like the crop doesn't look good now, but it certainly has time to make up. And soybeans is kind of like that crop that August is the important month here, if you will. But they'll have to include those or incorporate that 4 million reduction in soybean acreage. And as a result, that really pulls down new crop soybean ending stocks. And I anticipate that will be, potentially a little bit bullish to the market on the soybean side.
All right, Ben, wrapping up some of the WASD talk with wheat, one of your favorites. So what are your expectations there as you look at the wheat market?
Yeah, this is a good question as well. So we've largely kind of moved past the winter wheat window here for major changes. I think we have a pretty good idea of what's out there for the winter wheat categories. We will get a production update, which could change that yield. If anything, as I think producers have gotten into the fields, I think their expectations of wheat yields have actually increased. And that's true from Western Missouri all the way to Ohio. I think there's been pockets where the wheat has been very good. And so we could actually see a little bit of an increase in that wheat yield, which would be bearish to the wheat complex.
All right, Ben, looking out for the rest of the week outside of those reports there, what should farmers and ranchers be paying attention to as they try and track any changes?
Well, two things. One, in terms of market-wise, the National Oilseed Processors Association is set to release their June estimate for soybean crush next Monday. So that is, something that's always of interest to folks, and including, people like us that watch markets. The second thing I want to say is just kind of a public service reminder for producers that haven't reported their crops. Acreage reports to FSA are due this weekend. So make sure you get those done if you haven't done them.
More reports. How fun. So, all right. Well, everyone, thank you for joining us as we talked about the WASD and different factors that are impacting the market today. Ben, it's always a pleasure having you on here. If you'd like to learn more, know more, viewers and listeners, check us out at brownfieldagnews.com. You can also find our sister program, the weekly livestock market update, at brownfieldagnews.com. I'm Will Robinson on Brownfield.